Welcome to Looking at the Markets with David Modell. I've got a one standard deviation Bollinger Band strategy for you today. It is really simple and it's just very different from most of the Bollinger Band strategies that I see out there. So right now I'm using TradingView.com. I want to give them credit. And also I'm using a daily candlestick chart for Apple stock. Every candlestick represents 1 day of price action. But what I'm saying today could be tested out with 1 minute candles, 2, 3, 5 minute candles, hourly candles, whatever you like. All right. Just make sure that you test it out with demo or virtual trading. Don't use any real money to test it out. Okay. So try it out with demo or virtual trading before you even consider using real money with any strategy, including this one today. All right, so these are daily candlesticks for Apple stock. And I have the Bollinger Bands up there, but they're not the normal default settings. No. The default settings, the usual settings for Bollinger Bands are a 20-period look-back period, all right? And that's what I'm using. But also the standard default settings are 2 standard deviations. Okay, so the upper band is usually 2 standard deviations above the midline, and the lower Bollinger Band is usually 2 standard deviations below the midline. Okay, and so that's what I'll show you what that looks like. So first you go to Indicators and Strategies and type in Bollinger Bands, put it up there, right? That's easy enough. And then you can click on the little gear there and change the inputs. Go to the inputs, and you can keep the length at 20 if you want to. That's what I'm doing. But standard deviations, usually it's 2. Okay, and so usually it looks like this, nice and wide, right? And a lot of people will wait till the candle closes below the lower band to take a long position, and then they buy, and then they don't sell until it closes above the upper band. Well, that's cool. That's fine. You can use that if you want to. But what if I thought differently? What if I changed the standard deviations to 1 instead of 2? So now the upper band is not 2 standard deviations above the midline. Now it's only 1. And the lower band is 1 standard deviation below the midline instead of 2. Much narrower bands, right? The bands are much narrower or closer together. So the strategy would probably have to change a little bit. So now I'm thinking differently. Now I'm thinking I'm going to wait until a candle closes above the upper Bollinger Band. Interesting, right? Totally different way of thinking. Instead of waiting for it to go way down, you're waiting. This is more of a momentum strategy than a value investing strategy, right? You're not buying the dip. You're kind of buying the rips. You're buying after it goes up and closes above the upper Bollinger Band here. All right, and so you would buy here because it closed above the upper band, and then you stay in the trade, ride it all the way up until you get a close below that upper band, right? So you buy with a close above the upper band and you sell with a close below that same upper Bollinger Band. You're not even really looking at the lower band or the midline so much. All right, so you would have bought here, and then you would have sold not until you got here for a nice profit from here until there, right? Not too bad, okay? And then you wait. You don't do anything until it closes above the upper band again, okay? Ride it up, okay? Wait until it closes right here below the lower band. Closed below it, just a little bit, but it did it. And you would have profited again from here to here. And just rinse and repeat, right? And you get to really enjoy those run-ups, okay? Now, not every trade is going to be a winner. Sometimes it'll close above the upper band, and then pretty soon or immediately, you'll get a big red candle, and it'll close below that lower band, and you take a small loss. That's going to happen sometimes, okay? Might even happen 3, 4, 5 times in a row. Hopefully, no guarantees, hopefully you'll make up for that and more with the nice run-ups, especially if it's a good stock like Apple that has a tendency to have some nice run-ups there, nice rallies. Okay? So, like, here's an example of where it didn't work out so great. Okay, you would have, let's see, it didn't quite close above the upper band here. It did it here. So you would have bought here, and then it closed down here, unfortunately. Closed below the upper band here, and so you would have taken a loss, okay, from here to here. All right, but that's not too terrible. That's not too terrible because look how much money you made on this run up from here all the way up to here. So you really need those rallies. You need to ride them out and stick to your plan if it's a good one. But again, test it out first with demo or virtual trading, not real money. So to recap, you're only looking at the upper band. It's 1 standard deviation above the midline, 20 period look back, default setting. You buy with a close above the upper band and you sell with a close below that same upper Bollinger Band. Super simple, and it's a real momentum strategy. You're not buying dips, which is what a typical Bollinger Band strategy might be. All right, so check this one out. Add it to your arsenal of trading strategies if you want to, and you can let me know in the comments what you think. All right, so thanks a lot. I appreciate it. I will talk to you again soon.